Okay, so hello, sir.
Yes.
So please, concerning the bargaining power of buyers, I was also thinking, what if the customers are just few? And so it's like, if they don't buy your products, nobody, like, you don't get a lot of people to buy them. And so they have that bargaining power. So for example, let's say electricity in very large quantity, maybe for companies like Valco, that those aluminium companies, they consume electricity in greater like quantities and all. So like when you want to segment those kind of customers, don't you think I'm thinking they will have power because they are few in the market. You have just a few number of people buying that particular product or service. And so if they don't buy, it looks like nobody will buy. So then they can have power.
Okay,
yes. I agree with that.
Yeah, it makes sense. It makes like that's a. Sorry, go ahead.
Yeah, it means huge number of suppliers chasing after the very few customers. So the customer the power to influence price also.
Yeah, so that's a very, very good point. So I like the way you guys are thinking about it, you know. So you are thinking about it very broadly, and it's not like chew and pour to you, right? I do not want you to go into the exam doing that. Just it's relatable concepts, you know, it's everyday life. So your ability to express yourself on the paper and explain the circumstances is very, very key. It's very, very key. One thing I wanted to note here is that these factors, these little factors that I'm mentioning, how do I even say it? They are not necessarily mutually exclusive. They work hand in hand, right? So if you pick, let's say, the example you are given on the number of customers being few, another thing you see with this Valco and Co is that the size of their customer order, which is their consumption, is huge. So those two are working together to, you know, help you know whether the power of the buyer is high or the power of the customer is high. So these factors, they work together. They work together. And as you're able to, join the pieces together, these factors together, you're able to tell, okay, it means the power of the buyer here is high or it's not high. I hope I'm making sense. But Celestina, thanks for that. It's a good point.
Yeah.
Okay, then we have threats of new entrants. Threats of new entrants. You have barriers to entry, which is so this is not like the barrier you see at Kaswa Tollbooth. This is an invisible barrier that makes it difficult for people to enter into the industry. So the example I was given that these points are not mutual. Am I using the right word? Are not independent of each other, right? If you look at barriers to entry and look at capital requirements, one of the things that creates a barrier to entry is capital requirements. So there's a reason why we have only in the banking industry, right? We have a limited number of banks. Even in Ghana, there are too many. We're a population of 30 million or so, or 35. Don't even know. There are too many. But the reason is the capital requirements is high, and so it creates a barrier to entry. So Kojo Benefo cannot just wake up and say he's opening the bank. So that's a barrier. Automatically, some people cannot qualify. So if the barrier to entry is high, what happens to the threat of new entrants? Any thoughts? Let's make this a discussion so that it will help reinforce the things we've learned. If the threat of new entrants is like new people, like the way it was Vodafone, MTN, and Glo one day decided to come in, right? So if the barriers to entry are high, what happens? What is the impact in terms of threat of new entrants?
So for instance, the example you gave in the banking industry, the barrier to entry is high now. So as we've all seen that now the number of banks have reduced, and we are not even seeing any new bank approaching into the commercial zone. Yeah, so you realize that when barriers to entry is high, and then the threat of new entrants falls. So probably only one or two new firms can, come into the market in that industry. Yeah.
So that's what you see in the whole banking saga, right? If the barrier to entry is high, Anyway, yes. So that's a good point. You have brand loyalty. Sometimes there are situations where a company's product, people are loyal to it. So if you take Apple in the US, people like it like crazy. You barely see Samsung. People love Apple. Also, ICAG or Ghana, so they like Apple products, iPhone. So the loyalty is there because it gives them they say it gives them some swag, or in Ghana, that's in Ghana. So it gives them swag and all that. So if the brand loyalty is solid, like people are really attached to the product and are loyal to the brand, what happens to the threat of new entrants? Any thoughts? Any thoughts?
Okay, so when brand loyalty is high, then it's very difficult for the new entrant to gain a substantial market share. So it's very difficult for new products or new firms, new firms to enter into the market.
Okay, makes sense. Capital requirements, we talked about a government policy. Government policy could favor new entrants. It could also disfavor, I don't know the word to use, disfavor new entrants and all that. What about rivalry among existing competitors? Rivalry among existing competitors. Our time is running like crazy, and I didn't expect that to happen. Rivalry among existing competitors, right? It's influenced by things like the number of competitors, the industry growth, barriers to exit. There are barriers to exit. It means that you have more people within that industry, increase competition, the diversity of competitors and all that. So in a nutshell, these are the factors you need to know. So if I were going to take the strategic case study exam, I'll go through these models before I go and sit there, because I know that one of them will pass through. Then SWOT analysis. What analysis they might not ask, but in the pre-sim, you need that model because you see some strengths here, some weaknesses here, some opportunities here, some threats here. So strengths are the things that the company does well, right? So if you have things like, and they are internal, always remember that. Strengths, weaknesses are internal, they're in the organization. They're in the organization. So things like, when we are doing the customer focus limited, I hope you are now seeing how all these things reflect in the case. I hope you are seeing that. So you have things like ambitious team for strengths. Ambitious team, good location, intellectual property. All these things are strengths. Strengths. You have weaknesses. It could be internal resource limitations. This is a simple model. This is a simple model. Then for opportunities and threats, these are things you see in the external environment. In the external environment, so you have opportunities. You have opportunities, you have threats. Opportunities are like strengths by in the external environment. Threats are like weaknesses by in the external environment. So anything that is happening in the external. Anything that's happening in the external environment, you put it under opportunities and threats. So yeah, I give examples sorry, this shouldn't be undeserved markets. It should be underserved markets. Underserved. So markets that are underserved. If there's an opportunity in the market, within a segment of the market, all these things are opportunities, right? You have threats. Threats too could be negative press. It could be anything that is existing in the external environment. This is a simple model that is usually easy for a lot of people to understand. Then you have the balance scorecard. For some reason, the balance scorecard is my favorite model. I don't know why I do, but I just love the concept. So the balance scorecard looks at organizational performance from a very, very holistic perspective, right? So it looks at the financial side of things. It looks like the customer side of things. It looks at the internal process. It looks at organizational capacity or learning and growth. So if you pick financial, we all know what the financial stuff are, right? Financial stuff like revenue, profitability, and all that. If you pick customer objectives, you have things like increasing customer satisfaction and all that. All those things are related to customer objectives, right? Then you have internal processes like things like improving the operational processes, so things like information flow, cost control. Then you have organizational capacity, which deals with learning and growth, improving the knowledge and skills of people and all that. So the question I'll pose to you is that when you are looking into a case, right? When you are looking into a case, I don't know if you guys have started working on some of the past questions, but if you have, just let me know in the comment section, say yes or no. But I just want to find out, right? How do you look at cases? How do you analyze the case? How do you analyze the case? Because the reason I'm asking is because of this balance scorecard. What makes a strategic case study student very good is that he's balanced. He or she is balanced, right? So you're able to analyze it from a financial point of view. You're able to analyze it from a customer point of view, product point of view. You also see the internal, issues you know, like one case we are doing on the tourism industry, it was talking about learning and growth, right? How to, was talking about HR issues, how to improve the knowledge and skills of people and all that. So when you're going through I know you guys are accountants, you're doing IC, accounting, but you need to be very well-rounded to pass the strategic case study exam. It's very, very important. Any questions on balance scorecard?
Yes, sir.
Okay.
So if that's the case, why doesn't the balance scorecard form the more or less like the basis of the strategic case study instead of just more or less like a model? Because from the explanation you gave, you know, looking at a case, by almost you have to look at the financial parts and how they relate to the customers and similar processes. Virtually, we can say that even the first case we did, the customer, the customer food focus, or yes, yes, we had similar, more or less like a similar thing. So why doesn't it form the basis of it instead of just like a model?
Oh, I don't even know how to answer this, but so okay, let me give you the history of the balance scorecard. You know, this whole thing is how do I even explain this to you? So models are basically it's usually introduced by someone, right? To help in maybe a certain area of business, right? To help in a certain area of business. The reason I mentioned the balance scorecard in particular is that no one might tell you, but it's a discovery I've made that to be able to analyze your cases properly, you should look at it from these perspectives, right? So, and underlying the strategic case study is are these perspectives from financial to customer to learning and growth and all that. But in terms of why doesn't it form the basis? I don't know how to answer that question. I don't know if I'm getting the question properly. You know, can someone help me to understand? Because I don't know if I'm getting.
Oh, yes, sir. Yes, you're on track.
Yeah. It's a model, and the reason for this model is that the reason I'm saying that is because the history of the balance scorecard, it came to, you know, these models, they usually come to introduce a new era in business or to fix something. So for example, this balance scorecard, right? In the past, organizations were, you know, like just what raw accountants do, right? They were focused more on financial performance, right? So if the numbers are going well, that's it. The numbers are going bad, it means they are losing. Then the balance scorecard came in, I think it was by Kaplan and Norton, forgotten the people who designed it. They came in and said, no, it should be holistic. You know, it should be holistic. And so you have the other 4 pillars, the additional 3 pillars that they added to make it a more well-rounded assessment of the performance of a firm. Yeah, so I'm just saying that because when you're going through the case, like, you know, these 4 pillars should be on mind. It helps guide you on your analysis. But in terms of forming why doesn't it form the foundation? I don't really know how to answer that, to be honest. I don't know if I answered your question though.
Yes, please.
Yeah.
Yes, sir.
Yeah. There are different models that are part of the whole strategic case study thing. So, yeah, but it's a tip. It's just a tip I'm giving you based on what I see, because I see that people who are accountants, they are more focused on the financial side. Like last sitting like this, there was a whole it was like a budgeting thing, a budgeting of financial performance, something like that. And my students were so focused on it. We should do it. We should actually do the calculation. We should do the calculation. And I was like, I was just wondering how anybody will ask that. So we did it. And when they went into the exam, the examiner had already given that solution to them. So it was more of interpreting. Anyway, you have Answer's matrix. You have Answer's matrix. Can anyone explain Answer's matrix? We've talked about this in class, but looking at this simple chart, can anyone explain Answer's matrix?
Okay, sir.
Yes, boss.
With the Answer matrix, it's looking at as we can see on the screen, there's two metrics. Let me say analysis, and with the first quadrant where we have the market penetration. What it means is that we already have an existing product, and we want to penetrate to win more of the market share. That is an existing market. So assuming we have a product which is already existing, and then the market that we are already operating in it, and now we want to penetrate it more to win more share of that particular market. So that has to do with the market penetration. So using an existing product to win more of the market share, that is an existing market share. And when you check the second quadrant, which is the product development, with the product development, what we are trying to say is that you are brought up a new product. You have introduced a very new product, which you want to use to bring into your existing market. Yeah, so this is a whole new product that you are introducing into the market, also to win part of the market. And when we come to the market deployment, when we come to the market deployment, or I think other books will say market development or something of that sort. In this one, you are using an existing product to penetrate a new market. Yeah, you've realized maybe it could be that maybe you are operating in Ghana, and then you want to enter into some of these West African countries with your products. Assuming the product that you are producing is a local product which is known by only Ghanaians. So you've discovered that maybe some of these West African countries can also are also interested in it. So be using this your existing product to go and penetrate maybe a foreign market. And when it comes to diversification is a whole new thing. That is, you're introducing a new product into a new market. And I think with the four things that we are talking about, the diversification is the riskier, because your product is new, and also you are also introducing into a very new market. So yeah, so which means that there is no much of information as compared to the others in any order to. So the acquisition is most riskier than the other ones. So that's what I can see.
Wow, that's a very, very detailed explanation. But I'm more that's a very, very good explanation. But can anyone help with examples? So
okay.
I just want to make it a lot more relatable. You know, this whole strategy thing, I just want it to be on your fingertips. You know, I want it to be on your fingertips. So you're going into the exam, you know that, oh, you know, these are the issues, you know. So if you can give examples to make it relatable, then, you know, it makes it easier for you.
Okay, I want to try to give some examples.
Okay.
So when we look at the first quadrant, the existing product in the existing market, what Answer is saying is that the strategy, we should adopt market penetration strategies, some of which includes promotions and intensive advertisements to create awareness of the product. And with the new products in the existing markets.
Okay, so hold on with that.
Yeah.
Okay, you go ahead. So I'm trying to is there any product in Ghana that you can, or not even in Ghana, anywhere that you can give us an example that you think that use the market penetration strategy, or any of the quadrants? If something comes to mind, but you can go ahead.
Okay, there. I have a friend who is into these alcoholic beverages, and there used to be like serious adverts for this Adonko bitters. There's a particular song that became popular. That made the advertisements very popular. Adonko Famiko, those and it came to a time like they were doing those adverts a very long time. So the patronage for that product went very high. But it looks like it is no longer on the media, and it has it has affected the market for the product.
Okay,
so that's one example.
So this is an example. Is it an example of existing products, existing markets, or which one? Or new products?
Yes, market penetration. Existing products in existing markets.
Also, Adonko was already existing.
Yes.
And they spiced it up with a lot of adverts, a lot of promotion.
Yeah.
Oh, okay. Then you know the system. I didn't know that.
Yeah.
I didn't know Adonko. I thought it came recently. I see. Okay, that's a good example. Can you please continue?
Okay.
So, like, if you pick like product development or the second one, yeah.
For product development, I can't think of a new product.
Okay, that's fine.
Yeah.
That's fine. Okay. I think all your explanations, like, it captures everything very beautifully, right? It captures everything very beautifully. So yes. So for example, if you pick new products and existing markets, right? What comes to mind is okay, I don't know if you still consider this sweet chocolate drink a new product. But I came into the time when, okay, somebody said the same Adonko. Hey, you know, you follow this Adonko pal. I see.
I think it's because of the song in the advert.
Oh, okay. I see. So somebody said the same Adonku entered the Nigerian market. Wow. Okay. So it means that we can put it under market development, right? It means he really traveled. He really traveled. Yeah. So just make it relatable to you. There's no need to chew and pour here, right? Just make it relatable to you as you go through your case. These are some of the things you should be thinking about. Then you have BCG Growth Matrix. The BCG Growth Matrix. Can anyone explain this? I know this might be I don't know if this might be a bit tough, but we've talked about it in class. But can anyone explain it? Okay, first of all, I want to know, when will you use a type of model like this? When will it be relevant to use the BCG Growth Matrix? When do you think it will be relevant, to be useful?
Okay, so can you say that you can use it? Okay, assuming you're looking at the product or the life cycle of the firm or the product, you can look at it at probably just after the introductory stage. Here you're looking at how the industry is performing, or how your product will perform in a particular industry in terms of the market share and market growth. So you're looking at whether the industry itself is growing, and how will you or how will your product fare in that particular industry in terms of the market share. So for instance, you take is the industry growing, okay, and you also look at, okay, so if the industry is a growing industry, however, you have a very low market share, then it means that your product then becomes question mark. If I'm sure, yes, question mark. Yes, that means that, well, you have potential to, as the industry is growing, you have a potential to probably expand your market share. However, if you have a great market share, but the industry is not really growing, then you can look at that potential investment as more or less like a cash cow. So you can use it either at just after the introductory stage or at the maturity stage. Yes.
Fantastic. So basically, the labels here are very, very, they come in handy, right? You have question mark, you have stars, you have dogs, right? And you have cash cows. Now, question mark, it means that the company is missing something. There's a question mark. If someone says, Akwawi has a question mark on her, means that there's a problem somewhere. And then so it basically means that a question mark, it basically means that there's a low market share in a market that has a high growth, right? If you have a very low market share in a high market growth, the market is growing, but only you have a small share. Why? It means there's something wrong. You need serious thoughts. Then star, the star is the one that is performing. Things are booming for you. So high market, it means that there's a high for star, high market share, high market growth. It means that the opportunities and all that. Dog. When you hear dog, what comes to mind? A dog follows a human being. A dog is like, follow in quotes. That's how you think about it, or at least that's how I think about it too. Remember. So it means that it's a low market share and a low market growth. So it's, when we say something is lagging behind, like a dog, a dog will wait for its master or owner to be in front, and you'll be following like that. So then you have cash cow. When we say something is a cash cow, something that brings money, right? Something that brings money. It's a cash cow. And when we say cash cow, cows give milk, So we say cash cow, it's like a something or a business or something that gives you cash. So it means that to be at a high market share and a low market growth. High market share, low market growth. Once you have a high market share, it means that all the customers are with you and therefore you can make a lot of money out of them. So this is a simple way you can use to remember. Don't know if you have any questions. Okay, I didn't think this will take that long, but it's useful. I think it's very useful. There's another model, which is the Porter's, what do you call the diamond, which hopefully I hope we get to. So what was I even saying? Then let's move on to the Porter's value chain analysis, right? So who can explain what value chain is? Value chain.
So it's basically a chain of activities or a series of activities that adds value to a product as it goes through that series of activities.
Fantastic, fantastic, fantastic. So you have under the value chain, these activities are quite intuitive. They are quite intuitive. So you have primary activities and you have support activities, right? Primary activities, like I said here, they relate directly to the creation, sale, maintenance of a product or service. Now think about it this way, right? Let's say, think about any industry. Can someone give me an industry? Please give me something that's not difficult. Any industry or any kind of business, then I'll use it to explain the Porter's value chain. What industry would you want me to use? Any industry, mention anything.
Canned foods.
Okay, canned foods. So canned foods, you have, first of all, if I'm into canned food business, first of all, I need to get the food from somewhere. So if it's maybe like what Reggie Rockstone does, right? Watch in a can or bottle or whatever, I need to get the beans and the rice from somewhere, right? So I need to receive the beans, store the rice, and that's inbound. When we say something is inbound, it's coming in. It's coming in. Inbound logistics. Inbound logistics, So under inbound logistics, you are receiving, basically the raw materials that you use for whatever you're going to do. And at that point, your relationship with the supplier is very, very key. Then now I have to